Okay, so we are live, guys. Let me send it to the channel so that people would connect. Um, it's on the group. Yeah. I'm sharing it now. Let me share the link again to the group. Everybody in the community can join. Okay, so welcome everybody. Let's just give people time to connect, then we'll just start here. Okay. Are you being able to connect? Okay. Um, okay. So before we start, I'm looking at so welcome to today's live session. My name is Leonard Kunkwa, and I'm so happy to bringing be with you guys this afternoon. It's just 1:29, and this class is just designed to help beginners, people who are new to Forex, and even people who have been professionals and probably have years of trading experience to get to learn the basis of Forex and also fundamentals of Forex trading. And and so it's just my desire that I bring you simplify Forex trading. So I'm just basically here to simplify Forex trading. A lot of you here maybe have blown accounts. No, you've heard Forex is a scam and different opinion you've heard. And if you are one of those people, please, I just want you to come here open-minded. Just like pour everything you think you knew about Forex trading, leave them aside, and this time around, just focus on learn the real deal. Because Forex trading is something that I believe so strongly that has the ability to change your life just as it did for me as well. So, if you are new here, click the link on the description box on the YouTube channel. You see a link to our trading community. There, I post trade every day, and just by taking my trade in a month, literally, let me just say in a month because risk due to risk management. Let me say in 3 months, just by if you consistently watch my videos, you consistently um, um, follow instructions. I'm telling you, in less than 3 months, you should be very good in the forex market. I don't that you should start earning more than your 9 to 5 salary. Yeah, it's possible with forex. Yeah. It's very possible. So I was looking at some charts before I came in here. Okay, let me share my screen. Share screen. All right, so okay, so I believe my screen you guys could see it. So it's already late for this trade. It's called a sell opportunity, but I didn't call it because gold moves so fast. So for those of you who are new to the channel who probably take signals, one of the things you should know is that sometimes there's some trades that you just have to be very active. It's not that I call trade, you just set your stop loss and you just relax. No, just like look at it's not just about the trade I call, right? You have to know. Just imagine, okay, I called this trade when it was here and you pull your stop loss and the trade has gotten to this point, maybe let's say maybe you're using 0.1, you've made $8 and probably dollar it's an enough money for you at least in one trade. But because you were not watching the trade to check, you would be there till the trade just go against you and you just lose the $8 you've made and it just gets to hit your stop loss. So there's what is called trade management. Trade management is what you now do after you've taken a trade. So now we call this trade that way because this is the this is the support level, right? This psychological level down here. So we expect that because um, price go here. Look at one. Price has retested this level before, this up psychological level three times. So we expect that price should break down to the downside and test this level down here. But sometimes the market doesn't move just in a straight line, straight like this. It will go up, go left, go up. It just does this thing, but definitely due to our technical analysis we expect price to get to other level. So now most of you lose your account or blow money. Oh, Leonard, I lost money, I called the trader and I lost money and all that. Is because I know that there's a psychological reason to why most of you get to lose money trading forex. I'm coming. See, let me check. All right. So most of you do something that's very annoying. Like there's what is called trade management. Trade management is what you do now after you've placed a trade. For example, now you see that trade has gotten here. Trade has gone at least 30 pips in our favor. So the next important thing for we to do or for us to do is for we to come back and say, okay, to try to adjust our stop loss. So when I say adjust stop loss, example, let's say we enter this trade here, our trade is it's going back. Well, we expect that it still drops, right? Right. So let's say uh, I call this trade here, and you enter this trade, you saw that you are in profit already. So what you do is to break even. When I mean break even is to adjust your stop loss to your profit. For example, look at it here. You are here in profit and trade has gone. So let me just use some for example. Let's say, for example, we cut this trade up here, right? And we want the trade to go down here. This was our stop loss. So look at our stop loss means that this line between the red and the green line. For those of you who are newbie, let me just use a term that you could understand. Is where we enter this trade, and we see that trade has gone our favor. Trade has really gone on our favor. So what is expected of you is you should now know how to manage these trades. So now you've been in this profit. Now you should secure the profit to run risk free. That even though, for those of you who don't know what stop loss is a command you give your broker that when trade gets to maybe certain tips against you, it should close you out. So it's just like a risk management strategy. So that's why I like forex trading. It gives you the ability to set your risk. You can say, okay, in this trade, I'm willing to risk just $10. You are risking $10. Let's say you are risking $10 and you want to make times three. That is $30. You're risking $10 to like here now. Look at the we are that's the three. So that's what we are doing. We are any amount you are risking on this trade. If this trade go to our favor, you have to be making times three of what you are risking. Let's say you are risking $10, right, on this trade due to our stop loss. So we are targeting times three. So you see, risk to reward ratio is 3.57. That's almost four times four. So if you're risking $10 in this trade, at the end of this trade, you should be making approximately 38, $37. If you are risking $100, you should be making if everything goes well to our favor, you should be making times three. That is 300 and maybe 300 and she's making that amount. That's literally what I meant, right? So that's actually what I mean by that. So now, if trade has gone, at least trade has been going to our favor, what you should do is to adjust your stop loss. What does it mean to adjust your stop loss? Look at you bring you bring the you adjust your stop loss. It's not here as with phone. Okay, I think it's phone that could be able to do justice to this. Okay, so now let's say this is where we entered. Our stop loss is this number, 3.03146. So what should you do now is you should bring adjust your stop loss here and set to this place 3.02358. So now what it means is if this thing, maybe you are not with your phone and price just keep going up against us, you are going to see your broker is automatically going to close that trade for you in profit. You are still going to secure your profit. You understand? So you understand what I mean. Let's say you are on this trade and you adjusted your stop loss to this level. So for any reason, if price didn't get to our take profit, you're already running risk free on this trade. That means if you have $100 in your balance, uh, the trade is actually um, the trade is actually going to be that your $100 is secured. You are running hun- you are running risk free on this trade, because most times when you don't adjust your stop loss when the trade is on profit, what happens is you see the way market is moving. We're expecting a sell, but look at what is happening. Look at what is happening. The trade is going against us. And you might be surprised that this trade is going to reverse. What it's just doing is just deceiving people that are selling to start to just to close out. Right? People will not be scared. Oh. So that's why psychology comes. You can be here now and you are losing money, right? And you're losing a lot of money, but because of fear, you'll just rush to close out. But you see that price is still going to reverse. See, it's reversing back, right? So now, if you had adjusted your stop loss, you should not be scared, because anything that happens, you will just be patient and be watching this trade. Anything that gets to happen, you know that your capital, your money, your account balance is secured. You are running risk free, and if anything happens, your capital is secured. So that is why it's very important when you take signals, you should learn to manage those trades. Don't just take signals and go and sit down and waiting for to tell you to close. As good as it is to tell you, oh, close now, right? Which I would always do, but it's still very important to know when to adjust stop loss. Maybe next week I'll be teaching you how to flip account, how to turn $100 to $1,000, how to turn maybe your $50, which is not advisable. It's very high risk. Forex is possible. You can actually use $50 to make thousands of dollars. You can use $100 to make thousands of dollars. You can turn $20 to $100 maybe in 2 days or even in a day. So it gives you that opportunity to make crazy amount of money, and the same way too, it can take a whole lot of money. You can lose the whole thing at a spot. So that is why I always advise people use risk management depending on your account size. So this trade is already late for us to take it, but hopefully when price gets to this level, I hope that you guys have understand trade management. It's for you to be able to manage your trades after you've taken trade, to know when to adjust your stop loss. If price has gone to your favor, then you should adjust your stop loss to break even so that you are running risk free apparently on those trades. So now let's check GBP, JPY. And another thing I want us to talk about is I want us to discuss is time frame in forex trading, because you're not just here to take signal alone, you are here to learn too as well. So that's why I just want to teach you guys the basics so that you'd understand this thing. Um, Come, I'm trying to open my. Okay. Sorry, hold on. For me, coming. Let's. Um, so there's what we call time zone. The forex market, there's what we call trading session. Trading session, right? The forex market is actually open. It's open 24 hours in a day. So even during the week, so a day during the weekend, which allows traders to potentially trade all day and all night. So it's open 24 hours in a day except weekend. So, so what I mean here is that you can actually trade the forex market from morning till night, but except with exception for weekends. So that's it. So knowing the forex operating hour is very essential for you as a trader. So you need to know when the forex market opens and know when it closes as well, so that you'll be able to know the time frame that fits perfectly for you. So there are basically major four main trading sessions. We call it session in the forex market. So why it's very important for you to know this is um, there are trading hour that has a lot of volatility, because you know that time zone differs. When you are awake, other countries are awake, right? And this thing works with the timing of different countries. So the forex market time zone helps you to know for you to be able to convert in your local time zone. Some people only trade London session. Some people trade only New York session. Some people trade Asian session. While some people, so it's better for you to just know, okay, so that you can choose your own trading style and say, okay, when would be convenient for me to always take my to trade. So let's look at the forex trading session. So just because you can trade the market at any time of the day or night doesn't necessarily mean that you should. So the best time to trade is when the market is active with a lot of forex trader opening and closing positions. That's what they call volume. You want to trade when there's volume. Like you want to trade when you can just enter and in just little time you can be in profit, right? But if the market is slow, and there's no volume, like this market now, you can see there's volume, right? So in look at the candle, the market has formed in just 15 minutes. We're on the 15-minute time frame. So what it means is that for every candle you see here, it takes 15 minutes for any of this candle here to form. I can actually as well change the time frame. Um, Sorry, let me refresh. Um, I think, so hold on. Why is it seem like this? Hold on, I'm trying to. Oh, let me open on another tab. Um, okay. Trying to. Okay, so let me share my screen again. Okay, so, so I believe you can see now. So now look at here. So what it means is that for every candle you see, it took 15 minutes to open. So now you see that this look at this. You want to trade when there's volume. So how do you know there's volume in the market? Just look at 15 minutes. Look at the long candle. that this cell formed. Look at this place, this place I'm pointing now. You see this drop, this slash here. It shows there was a lot of volume in the market. You don't want to be trading sessions, maybe in the look at this one now. Just imagine trading here. You're entering position at this. Look at the 15 minute, look at the tiny candle that is forming here. You will just get tired because you will not even know you will not even you'll just be there, you cannot even get direction. So you want to trade sharp and let you know if you're in profit or in loss. Let's go back. You see here there was volume. Look at the big candles that form in 15 minutes, right? So the time frame, it can be that this tiny candle we're seeing, it was at night, maybe during the Asian session, there's not a lot of volume, right? You can see. So you want to trade when there's volume. And especially New York and London session, they are the most volatile. They are the sessions that has a lot of shit, that has a lot of volume. They are the sessions with a lot of volume. So you want to be trading during those times, right? So it's something you want to be trading on during those times. So the best time to trade the market is when there's a lot of volume. So the market can be broken up into four major trading sessions. So now we have, let me share, let me share a picture with you so that you have a clear understanding of what I'm doing. So now we've discussed on trade management. So now I'm trying to teach you guys on um, trading sessions, right? Very important you know it. All right. See, I can see there we have the Sydney session, we have the Tokyo session, we have the London session, and the New York session. So you can see that the Sydney session starts 7 a.m., right? 7 a.m. UTC, right? UTC time, right? So, okay, you see it. And Tokyo session starts 5 a.m. and London session starts 8 p.m. and New York session starts by 3:30. So look at, so 7 a.m. It starts from, look at it from, so you see that there are different times these four sessions start. But let's just focus on these two sessions. They are the ones that, we Africans, we have the best time to trade the financial market because London session starts by 8 p.m. in the morning. Our time, 8 p.m. That is our 8 p.m. So by 8 p.m. you should be already be awake. So it start 8 p.m. and we are 1 hour ahead of London session. So their market open 8 p.m. in London session. So by 9 p.m. our time, it's London session. So you see we are awake to trade that session. So New York session starts by 3:30 p.m. their time, but in Nigeria, our New York session is 2 p.m. Once it's 2 p.m., it's for London session is from 8 p.m. to 6 p.m. 8 p.m. 8 in the morning, sorry, 8 a.m. our time to 6 p.m. our time. Why New York session start by 3 p.m. to 3 p.m. our 2 p.m. our time and 8 p.m. in the night, right? So you can see that, and you see that there's what we call overlap session. You can see from here that 8 p.m. to 6 p.m. and London session starts 2 p.m. to 3 to 8 p.m. So you can see that that time there's a period of time since 2 p.m. till 6 p.m. is what we call overlap session. That time, both the London session and the New York session are active on the trade. So you see there will be a lot of volume. So it's like a cross session where these guys are still active, these guys are active. So there's a lot of volatility in the market. So 2 p.m. the market moves crazily. If you have been trading Forex for a while, you should know what I'm talking about. Once it's 2 p.m., you can literally see uh, crazy movement happening in the Forex market by that time, by that 2 p.m. By that 2 p.m. You can literally see crazy movement happening in the Forex market at that time. So another thing you should know that, so the best time for we that trade, we usually will trade the London session and New York session. There are some currency that at least GBP, those Great British Pound, any currency that has the as the code currency GBP, that is Euro USD, GBP USD, GBP JPY. Those currency would be have usually would have a lot of volatility at that time. Why currency with USD as their base currency usually would have a lot of volatility by 2 p.m. when the when that nation is awake. So you can see that. So now, with that being said, um, let's just go and do analysis and let's take some trades. I hope everybody has their account funded because we're here to it's money time. Let's check GBP USD. So we've missed this trade. So this trade started here in the morning, early in the let's say around 8:15. Can see when 8:15 the market started. If you were in this trade early in the morning, so that 8:50, look at you would have been in this much profit. So it's already late to take this trade because even though the access for the trade to get to this line, but for we to get trade to get to this line now, it can happen so fast and you can just be making it too long. Or we're still going to have opportunity um, to trade. Okay, so this is US 30. Okay, so okay, Euro USD. Um, I'm seeing a buy opportunity on Euro USD, but let me confirm it on the 1 hour time frame. Okay. So let's buy Euro USD. Let me get people. I'll post it on the group chat for those of you on my group chat. They buy. So those of you who are here, buy Euro USD, and our stop loss is going to be. Let me adjust this. Let me adjust this first. Our stop loss is going to be. Is there any paper or anything I can write? So that's so. So remember, trading is all about your risk management. So you want to use, if you have an account less than $100, you want to be using we are risking using 0.01, right? So I need a pen. Okay, let me open my notes on my phone, on my laptop. So um, our stop loss will be here. So how many pips? Let me see how many pips stop loss were. Yeah, so 16 pips stop loss. So 16 pips. Right. So your stop loss would be 1 point. Stop loss should be 1.08137. 1.08, 1.08137, 1.08537, 1.08537. Okay. 1.08 1.08137. So that is our stop loss, 1.0837. So for those of you who won't like to take profit, put your take profit at 1.08517, 1.08517, 1.08517, 1.08157. Okay, so these are our take profit. 1.08. 1.081, 1.08. No, I don't think that's correct. 1.08. Let's use 1.08512. 1.08512. So I'll post it on the group chat now. Let me post it on the group chat. Sell Euro USD. Buy Euro USD. Zero, yeah, you could use 0.01 if you have an account. We are just losing stop loss is 16 pips. So I've posted it on the group chat. So if you are not on the group chat, just click the link on the description box on the this thing and just on the my bio, and you can as well just take this trade with us. All right, so let's check GBP JPY network. Okay, let me see US CHF JP CHF. Um, this market is very slow. US oil, US oil is buying. Network is very slow. Okay. Maybe USD. So we're late in this trade. We're so late on this trade. So Bitcoin by 2 p.m. I'm seeing a sell opportunity on BTC, but don't enter now. Right? Don't enter now. So what I'm waiting for price to do is for price to break this level. Let me put a arrow. What I'm waiting for is for price to get to this level. Once price gets here, then we'll be selling shorting BTC USD. So patience is matter. So let's see what price does at this point. If price breaks this box, I'll be sharing the signal to be selling BTC USD for. But for now, just have one trade. But I want to see if we can get to at least two. Let's see. GBP USD. Okay. I'm seeing. Um, okay, let this candle close this. Let's see what happens. I'm seeing a sell opportunity to our GBP JPY. But this candle just have 7 seconds to close. Let me see what price we here because see this strategy that I use hardly would fail. Look at it, this trend line strategy. You see that this is a 1 hour time frame. I drew this trend line, this line you see on the 4 hour, it's called trend line. So when price bounced, anytime price bounce here, you know that market would want to buy. You see, it gets here, it bounce here, it bought. Anytime price so sell and get here, once you buy, you can never be wrong. You will never be wrong. At least three times, if market do the third, at least the fourth time now we can be more skeptical to say, okay, let's see what market will do. So let's go back and see, just confirm this. So let's see. So market is just giving us indecision. But this is a good sell opportunity, but I expect market to still go up a bit. At least get to this point before it starts selling. Let me drop. I'll be checking it. So when price gets at least to this up here, when price gets here, I'll be posting this one on the group. So it's not ready yet. So because I know that price will still go up, retest up before it comes down. Okay. So gold. Okay. So this is gold, and so what gold is doing, I'm seeing that gold wants to buy, really wants to buy. Okay. So I'm seeing a buy gold. So if you're so let's buy gold zero. Let's use 0.01. Should buy gold as well, but as I say, you have to be active on this trade, right? You have to be very active to be monitoring it, right? Because gold can be very volatile. But let's buy gold. Yeah, here buy gold. Our stop loss is going to be down here. Right. So our stop loss will be, let's use a very thin stop loss. The stop loss will be three. Yes, let me reduce it. So let's use 301690, 301690, 301690, 301690, 301690. So that's our stop loss. Three 3,000. Okay. So we are buying gold. We have to be monitoring the good trade. Let me drop it. Buy gold. Stop loss. So I'll drop it. So we'll just be monitoring it. Take profits. Um, for those of you who like to take profits, um, I want you to put at least your take profit should be on this high 3028,115. 3028,115. For those of you who like to put take profit. So we've called two trade now. We've called trade on gold. We are buying gold and we are Euro USD. I call the trade buy too. Um, let me see. Buy, okay. Price is still fluctuating around down here. So yeah, you should be on loss, but you have to be on loss to be on take on profit. So let me see USD card. Okay. I think those two trades are enough. Right. I think they're enough. So these two trades. So if you entered gold when I asked you to enter, you should be in profits already, small profits. So just stay active on the group. Remember what I taught you on trade management. Please take it very seriously. Stay active on the group so that you'll be able to know when to close out. So we've come to the end of today's class. Just 41 minutes to this class. So we do this live session every Tuesday. Please don't forget to like and to subscribe to this YouTube channel so that this video could be recommended to more people. So every time we come here, we simplify Forex in such a way that you, the normal person, can earn. And if you are looking to start making for money through Forex, you can join my Forex community for free. And I post free trade all through the week just as we've done now. I just post every trade I'm in. So we've closed for today. So for those of you who took this trade, stay active on the WhatsApp group. I will let you know when to close. But please ensure you use proper risk management. That is the simply reason why you blow your account. Not over leverage. Don't use one lot size for $100 account. It's very risky. You could lose everything. But at least if you have an account of $100 and use 0.01 and at least market move against you 10 pips, if market moves against you 10 pips, you should just be losing for at least 10 pips with your 0.01. You should just be losing $1. So you see, it's proper risk management. So guys, until next Tuesday, please do well to subscribe, do well to listen, and keep going. Thank you so much and see you guys next week. Peace out.